Hello ladies and gentlemen, and welcome back to another Bitcoin video. Today we've got a couple of important things to talk about, one of which being the critical bullish pennant formation that is forming on the Bitcoin daily chart, as you can see on the screen here with these yellow solid lines. That's very important, and that's going to be very indicative of what's going to be going on for the next major move on Bitcoin. But the other thing we need to talk about as well is partially what I discussed yesterday and expanding upon that. What did I discuss yesterday to start with? Well, I discussed the fact that I think that Bitcoin has fundamentally succeeded as an asset. That's probably the first time I can say that relative to Bitcoin's lifespan ever, because besides the last few months, it's been very speculative as to whether Bitcoin will actually succeed or not. Now, I think that Bitcoin has succeeded, and it's succeeded in the sense that it's come from a speculative asset that's basically mirroring the stock market to distancing itself from the stock market and actually correlating with gold, hence making that term, that label, digital gold, a reality, which is success, in my opinion, for Bitcoin. So that digital gold kind of term, that label, I spoke about it yesterday, is becoming a reality. And at the same time as this is happening, why is that happening? Why is Bitcoin now doing that as opposed to any other time in its lifespan? And the reason why is because of the banking crisis we're seeing in the United States of America. What I have here is a screenshot, okay, of basically, a lot. Well, I don't know how many there exactly are. I'm assuming there's hundreds of banks in the United States of America. But I'm just saying these are very, very major ones, right? And this is a list on a daily chart, right, of the negative percentage losses of major banks in the United States of America over a 24-hour period. We're seeing 61% losses there. Western Alliance, I don't know what that is, but I do know what PacWest is, and that's 58% loss. I do know Bank of Hawaii, 11% loss. Bank United, 10% loss. We've got, what else do we have here? We have Lincoln National, 7% loss. First Republic Bank, 9% loss. I think that was purchased by JP Morgan as well to stop it from completely going under. But the point of the matter is, look, those are the ones I recognized. Obviously, I'm not from the United States of America. You guys who are from the US might recognize more. But the point of the matter is, it doesn't matter how many I know. The fact of the matter is, the banks aren't doing well, okay? The banks aren't doing well. There's a massive crisis, okay? And there's bailouts coming out. We've seen a bailout, massive banking bailout that came out, I think it was February or March, and during that period of time, the Federal Reserve was forced to print a lot of money, and they reversed 6 months of quantitative tightening, the effects of quantitative tightening, based on basically like a week of printing, which is insanity, right? Absolute insanity. And whether you agree with the banking bailouts or not is besides the point here. The point is, as this is happening, and as the economic situation looks worse, as the banks get in worse and worse positions, what's happening? Gold has skyrocketed, not really skyrocketed, but it's got upwards, okay, to new all-time highs. It has placed a new high at around 2080. We've never seen gold go that high in its entire lifespan. So new all-time high on gold as soon as this banking, bailouts, the banking crisis is happening. That's not a coincidence, guys. Gold is going upwards because of the banking crisis, okay? Gold is going upwards because people are investing in gold because they no longer believe, or they're having, at least having doubts about the stability of the current economic system. So what we're seeing now, okay, is gold go upwards, and at the same time, what we discussed a couple of weeks ago for the first time, Bitcoin has reached its biggest ever, its largest ever correlation to gold on a 30-day moving average, okay? Bitcoin, as gold is going upwards to new highs based on the banking collapses, Bitcoin is correlating tighter to gold than it's ever correlated before, and it's completely distanced itself to the point in which it's not even correlated anymore on a short-term basis. It could recorrelate to the NASDAQ or the S&P 500, okay? So Bitcoin has proved itself during this period of time to be more akin to gold from a fundamental perspective than to stocks, okay? And what this means is that if this trend continues, and if the banking crisis does get worse, Bitcoin will actually go upwards as gold has been doing. So speaking of gold, it's great to see it go upwards here. Obviously, the circumstances in which it's doing so is suboptimal. No one wants to see the economy fall apart, but that's just what it is, right? So gold's going upwards. It's still facing very strong resistance, though, unfortunately. It's got a red resistance zone, as you can see on the screen here, between around 2070 and 2080. If it breaks that, it will be in a new parabolic trend, and I'll expect it to go upwards very rapidly. I see no reason why it won't do that considering the economic situation right now. And based on that, I see no reason why Bitcoin won't move upwards, okay? So macro scale, Bitcoin looks very good. Gold looks very good. We already know with Bitcoin, 4-year cycle theory, Okay, 4-year cycle theory said the bottom was in back here in Q4 2022. I stuck by that, and it proved out to be true. And now we're seeing evidence that it's coming out on a constant basis to support it. What we have as well is the Federal Reserve, the FOMC release of just a few days ago here was a raise by 25 basis points. We're now seeing a 96.3% chance, according to the market's estimates, that we see no more rate hikes. Okay, rate hikes are done according to the market's estimates here at 96%. So we've got what do we have here? We've got a 4% chance, a 3.7% chance that we see one more rate hike, and after that it will be nothing. But the vast majority of the market is assuming here, and hence the market is assuming that the rate hikes are done. So this puts us in a territory here, okay, in which we're expecting rates to start decreasing very soon, even as soon as next month, even as soon as June, we could be seeing the first rate decrease. And we've seen historically, right, on the S&P 500, rates kind of decreasing leads to S&P 500 bottoming. Now, as of right now, the S&P 500 has been bottomed out for 6 months. Actually, more than that, 7 months we've been bottomed out in the S&P 500 since October 2022. Everyone keeps screaming, you know, the bears keep saying it's going to go down to new lows, it's going to go down to new lows, it's going to crash more. You know, I'm not saying it's not going to do that. I don't care what it does. The fact of the matter is, where is the crash, okay? Right now, we have entered the bottoming zone for the S&P. Based on every single historical correction we've had in the S&P 500, that is major, which is 1, 2, 3, 4, 5, 6, 7. 7, right? Starting in, 1974 through to 2009. And 2020 was the last one, actually. So from very, very long ago, 50 years ago, to very recently, a few years ago, we've seen every single S&P 500 bottom out when rates have started going down. Guess what? Rates are starting to go down very soon, and the S&P 500 has been bottomed out for 7 months, and it's 20% up from the lows. Where is the big correction that the bears keep screaming for? It's not here. I can't see it, right? I'm not saying it's not going to happen. I'm just saying that sometimes you need to actually trust the charts that you're relevantly looking at, right? I don't care about the S&P 500 or the NASDAQ. I don't care. I'm a Bitcoin analyst. At this point in time, first of all, I see no real actual concrete evidence that the S&P is going to go down because we've been bottomed out for 7 months, okay? And by the way, the trends that we're looking at from the past year could actually be not even relevant to what we're seeing right now because, you know, we're seeing for the first time, rates going upwards while the market's going downwards. We've never seen that historically. Out of all these 7 data points, rates were going downwards while the market was going downwards. We're seeing rates rise while the market was going downwards. So that's an anomaly, right? We've never seen it before, and so we can't be saying that the trends that have worked in the past are going to work again because we've never seen this market environment before. That's one thing. The second thing, it's been bottomed out for 7 months. And the third thing is, Bitcoin's not even bloody correlated to the thing right now. So who cares, frankly, what happens to the S&P? I certainly don't. I'm a Bitcoin analyst. If Bitcoin re-correlates to the S&P, the NASDAQ, whatever, then I'll start caring again. At this point, I don't care. It's not relevant to my investing. It's not relevant to me at all. What I care about is Bitcoin. And the Bitcoin charts are very, very clear. What we see on Bitcoin, right, on the monthly chart here, you can look at the RSI. You can see that yellow line in the RSI crosses with a bullish cross as per the green circle on the monthly RSI. We've just seen another bullish cross. The last 3 times we saw those bullish crosses, we saw a 5,700% gain. We saw a 228% gain. We saw a 550% gain, sorry. We've just seen that cross again 2 months ago, and we're up significantly from that cross already. And if history has anything to say for it, right, we should be going up very, very much more. I'm stuttering a little bit. I apologize for that. The point is, the macro situation for Bitcoin is very good. The situation for the S&P 500 at this point in time is just simply not relevant, and it's not clearly bad. Okay, that's what I'm saying. Yeah, look, it probably will go down. Okay, it probably will go down eventually. But the point is, first and foremost, it's not relevant at this point in time because it's not, and it's been bottomed out for so long. And during this period of time, I find it funny, right, where people say that the bullish people are sheep and we're just following the herd because the market's going up. But the bearish people literally cling to this one argument for 7 months straight with absolutely no new evidence of it actually becoming a successful argument. We've been bottomed out, guys, on the S&P since the 13th of October. Where is the correction you've been screaming about for months? It's not here. You need to adjust your argument as per the charts. If you've been screaming for a correction on Bitcoin based on the S&P since October, you have not adjusted your arguments as per the charts. You simply haven't. Because in that period of time, Bitcoin has decorrelated from the S&P, and the S&P hasn't even gone down. So you're the sheep. That's simply all I can say about it. And that's an objective point of view. That's not even my opinion. You're the sheep, clearly, because you're clinging to a one-liner. Oh, the S&P is going to drag down Bitcoin. That's a one-liner. It's not based on any evidence. In fact, the evidence have disproven it at this point in time. So you're the sheep. That's all I can say to it. The bulls, as of right now, are not the sheep at all. The bulls have actual evidence supporting their case. Since October, the bearish argument hasn't changed at all. Since October, we've seen many bullish things on Bitcoin. We've seen this monthly cross. We've seen breaking above the 21 EMA in the monthly chart. We've seen bottoming out on a yellow support zone in the monthly chart. We've seen a break above 44 on the RSI in the monthly chart. We've seen a break above 28.6K on the weekly chart, break above 25.2K. We've seen a break above the 200-week SMA, which is one of the most critical moving averages in Bitcoin's price history. We've seen a break above the 50 as well, which is quite important. Break above bull market support band. We've seen a break above, what else, guys? I could probably go on for a long period of time. The point is, the bullish argument has actually progressed, and the bearish argument has remained the same it was 7 months ago with no new data to support it and actually getting weaker. So who's the sheep? You know what I mean? I think, as of right now, Bitcoin, my opinion is the same, right? Bitcoin macro scale looks very good. It's just about the short term, and that's when we can get into this triangle formation. So, we have a triangle formation on Bitcoin. For the sake of clarity, I'm going to remove these 2 yellow dotted lines, but they are relevant. And in fact, I'll just show you where they are so you can copy them down on your chart. If you find them relevant, look at those yellow lines there and copy them down. I'm going to delete them now for the sake of clarity here. As you can see, we have a bullish pennant formation on Bitcoin that is stemming backwards here from the 28th of March going through to the 24th of April. And the top line of that is coming from 14th of April, going through to a couple of wicks here in April as well, and a wick just today. So we're testing the upper band of that bullish pennant formation. As I said, it is a bullish pennant formation. It will most likely break to the upside. That's what bullish pennant formations do. As of the RSI as well, we have a critical downtrending red line in the RSI. Now that could be seen as a bearish divergence, and that's what it is, right? But at the same time, it could be seen as a resistance line. And when we break it to the upside, we could be seeing the next parabolic move, and that could come, at the same time as a break above, say, 31.3K. So there's 2 ways to look at it, right? And regardless of which way you look at it, I think that just because we have one bearish divergence in the daily chart, it doesn't really discount the rest of what's going on. Look, short term, we're still within a massive bullish pennant formation. We can deviate quite exponentially within this pennant formation. We can go all the way down to that, 27.2K support zone. That's the bottom of the pennant. So we can move down quite significantly. We can move down 2,000 USD, but so long as we're in that pennant formation, nothing really changes on a macro scale. And quite frankly, so long as we're above 25.2K, nothing really changes on a macro scale either. So we've got a lot of room to move to the downside. We could be seeing a break of this pennant formation to the upside sooner rather than later. We do have a micro triangle that's forming within the pennant. Okay, and we have a support line on that triangle forming from the 2nd of May, and that will be coming to an apex around the 8th of May in 3 days. So we could actually be seeing a break to the upside of the pennant within the next 3 days. We could also be seeing a break to the downside and a retest of the actual bottom of the larger pennant within 3 days as well. So quite a few things to look out for there. If you're interested in trades, you're interested in trading, what you can do is you can go to the 4-hourly chart like I've done here, and you can actually zoom in even further than that. And you can draw the overall larger pennant that I've just drawn in on my daily chart. And you can also draw the smaller micro triangle on the 4-hourly chart, or anything smaller than that, such as the hourly chart. And you can trade based on if we break out to the upside, you enter a long position, or break to the downside, you enter a short position. You can also use the RSI line here, the RSI support line, as a predictive indicator. If we break that to the downside, it's quite likely we break this micro triangle to the downside as well, and come down for a retest of 28.6K before resetting and potentially even breaking upside from there. There's many things you can do in the short term to trade this region. I think this is a very simplistic price region to trade. If you just draw up the larger pennant formation and draw up the micro triangle formation, you can get some very nice profitable trades in the next few days here for sure. And I do recommend that everyone goes ahead and does that if they're interested in trading. But overall, this pennant formation is the main thing we're looking at on Bitcoin for the next, it could be the next 3 days before we see a break, and it could also be until the end of the larger pennant, which could be the end of May. So for the month of May, this is the most important thing we're looking at. And I'll leave you guys with that because that's basically it. So thank you guys for watching. Before we end the video, I'll check out a few things, and I highly recommend you check out the BitGet exchange for one. This is an exchange that, is in partnership with the Wolves Crypto YouTube channel. I reached out to these guys, they didn't reach out to me. That's how much I like the exchange. I've been partnered with them for about a year, and during that period of time, I've encouraged people to sign up using my referral link to get a 15% trading fee discount for life on the exchange, and also getting access to an exchange with 5 times lower fees than Binance. One of the cheapest fees in the market, non-KYC, optional KYC. There's much utility to that, as well as lining up with the fundamental values of cryptocurrency. So go ahead and sign up there if you're interested. The Crypto Academy as well teaches people how to trade. This is a course I've developed with Megawell Crypto. You might be familiar with him. He's got a YouTube channel. Great YouTube channel, by the way. Great guy as well. Great analyst. Check him out. I highly recommend you do that. It's the Megawell Crypto. We developed this course last year. We released it almost a year ago now. We're coming up on a year old with this course. We've got about 100 students, 99 students as of this month. And so you can become one of them. You can check out all the information on the website and decide whether it's right for you. And ultimately, you can chuck us an email at our email address, which is listed on the website here as well, cryptoacademycourses@gmail.com. And then, guys, finally, the VIP group, it's 100 USD for 3 months of entry. It's ran on Telegram, and I post altcoin trading signals in there sub daily. Again, 100 USD for 3 months. I've posted the last 6 months of trading results, the wins, the losses, everything. You can check out our track record and see if it's right for you. So thank you guys for watching. All of those links will be in the description, and I'll catch you in the next video. Cheers.